Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. My name is Jesse Day. The Vancouver Resource Investment Conference wrapped up last month. We have tons of videos on the channel for you guys to check out. More coming as well. But for now, of course, we're bringing the VRIC to you with our series of expert online panels. I'm very excited for the one we have lined up for you today. We have Lynette Zang, founder and CEO of Zang Enterprises, and Rafi Farber, publisher of The Endgame Investor. We're going to be honing in on the gold market today. We're going to be talking about the Fed, including some recent developments that just may see Ron Paul heading an audit of the Fed. Who knows if that'll happen or not, but we're going to discuss it along with a lot more. It's great to have both of you on the show.
Happy to be here. Thanks for having me.
Good to be here too, Jesse.
Well, let's start with gold hitting new all-time highs, at least in nominal terms, a major milestone. It seems this bull market, gold has been ripping all throughout last year, and we've started off 2025 with a bang. I want to get both of your takes on what brought us here and what are the catalysts that you think could take us to that 3,000 level and beyond. Lynette, I'll start with you.
Well, honestly, it is that sticky inflation and also market uncertainty, because there is a lot of uncertainty in these markets. And hey, the inflation print came in hotter than expected today. Well, that would be for some, but I'm not surprised.
And Rafi, what do you think brought us to this level? What are the catalysts that could take us higher?
What brought us to this level? The fact that we've been increasing the supply of dollars since 1971 and before. So the same forces that have been bringing gold higher since 1933 are still bringing it higher today, and it'll keep doing that. I don't think the all-time high in nominal terms, or at least in dollar terms, is really that significant. It's psychologically significant. People are going to be talking about it. We'll be talking about it. It's psychologically significant even to us, but in terms of the danger of the number, I think that it's really going to become a dangerous game, maybe imminently, when the gold to S&P 500 ratio, not specifically the gold to S&P 500 ratio, but just use that as a proxy of gold to stocks, when that really starts to rise, and people's dollar amounts, and they imagine a certain amount of purchasing power in their portfolios. When that really starts to fall versus gold, people are going to panic and get out of all their derivatives, including stocks and bonds, and in my opinion, Bitcoin. But I'm not sure if we agree on that, but if we don't, that's fine. And really pile into gold. And in terms of a catalyst that could bring us to 3,000, I don't think we even need one. It could just randomly go there, like today.
Absolutely. I want to pull on that thread, Lynette. You mentioned the CPI print coming in harder than expected, at least to the powers that be. You said it was no surprise to you. In response, also, we saw the yield on the 10-year Treasury note jump. What are the implications here? Obviously, the Fed does not have things under control, despite what Jerome Powell continuously says. Where are we there in that situation with the CPI print today?
Well, the reality is nothing's really working the way they expect it to work. And it's not just on the CPI, but it really is because there's no purchasing power left in the currency. So to Rafi's point, with all the money printing that's out there, and all of the expected more printing that they're going to do to fund everything that they want, and then you take into account the tariffs and, this war that's really got everybody going like this. Will he, won't he? What's the next move? Where's that going? Honest to goodness, no, I was not surprised, because the numbers are jury rigged anyway to look better. I think I got a 2.5% raise on my Social Security. I mean, that's a joke. Inflation is baked into the currency. We're just at the end of it. So no, things aren't going to work the way they set it up. It's not a big surprise.
And Rafi, your thoughts. Why do people even pay attention to the data coming out of the Fed these days? It seems that the market tends to react. Both institutional investors and retail participants watch what the Fed says, watches what they do, and I don't know if they believe the statistics or not, but they certainly do react to them. Shouldn't everybody know this data is bogus by now?
It might be bogus. It's been bogus, and it just keeps getting more and more bogus as official reality keeps diverging with actual reality, if we can call it that. They pay attention to it because everyone is taught, all these big institutional traders controlling billions or hundreds of billions of dollars. They're taught a certain program, they're taught a certain way of trading, and they all follow it. And just like we see in the medical industry, in the education industry, in every industry, everyone is stultified into the paths that they've been taught to take since the 1930s, 40s, 50s, and everyone's getting progressively dumber. And the people that bring attention to it and say, "Look, guys, this is kind of stupid. Why don't you stop being idiots?" They say we're conspiracy theorists. So basically, why are they paying attention to? Because that's their habit. But as I've noticed today, I was checking just the basic numbers as Lynette was talking. So I just got out of the gym, so I don't really know what's going on today besides the CPI print. But I looked, and the CPI print came in, and gold, was smashed a little bit to like 28.80. Oh no, it's probably going to zero tomorrow. And then it went back up to about 15 minutes later, or even sooner than that. Um, and it's like, the general reaction is, if inflation, if consumer prices are moving higher faster than expected, then you can expect rate hikes, which is bad for gold, but it's not really. The case in point is the late 1970s, 1980, when at rate hike after rate hike after rate hike, and gold went to all-time highs in real terms and nominal terms at the time. So we see that they are reacting to the Fed, which is why gold was initially smashed, because of all the algorithms and training that they have to sell gold when inflation goes higher, and then expect the Fed to do X, Y, Z. It's not going to work anymore, and we're already seeing it start to unravel, which is why gold was only smashed for about 15 minutes, and then now I think it's about even today.
Well, while we're on the topic of the Fed, an interesting development recently was that Jerome Powell, on the record, said that the Federal Reserve will not ever create a central bank digital currency. It was interesting. After the person questioning him asked that, he said no. And then the person questioning him said, "Well, thank you so much. That's very vital. We're so happy that you said that." And Jerome Powell was smiling like he was some kind of good guy. Like, yeah, we're so great, aren't we? Do you believe him, first of all? And do you think by saying no to that specific question, it could open the door to, well, we're creating a different type of digital currency in the future, or the Fed isn't creating it, but some government agency, is creating it that perhaps we could be involved with behind the scenes? What are your thoughts there, Lynette?
Yeah, I absolutely don't believe anything that anybody says in our governments or our central banks, because frankly, their job is to lie. And the direction that I see everything going in tells me that there's going to be more and more and more controls put on us. And we've already lost so many of our freedoms. We don't even realize it. It's like the frog in the pot of water. But that's what the real battle is to retain and take back, claw back our rights and our freedoms.
And Rafi, is Jerome Powell a good guy who really cares about our personal freedoms, and so he's deciding to stand firm against the introduction of a CBDC? What's going on here?
My opinion generally on CBDCs is that it's not going to happen because it's impossible. It would just be another derivative layer on top of the dollar that we already have, and the pyramid's already too big. It's already toppling, so building another layer on top of the pyramid is just going to make it fall faster. I was never worried about CBDCs. I don't think they're relevant. And so I don't care. I don't care what he says. Not that I believe him, that I think he's being honest, that he's not going to make a CBDC. Maybe he's trying to. In terms of Powell personally, he's probably a really nice guy. I could probably, sit down and talk with him, and maybe he'd make some sense. But the guy is one of the final Roman emperors. They're stuck in their seat. They can't really do anything. The system is collapsing around them. What do you expect them to do? There's nothing he can do. His job is to keep the pretense up as long as possible, while everyone connected to him can, if they're smart enough, scurry away enough nuts for the winter and go into hibernation, maybe in Epstein Island or wherever else they want to go. There's not much time left, and maybe he knows that, and maybe he doesn't. But Jerome Powell is he's just like a crash test dummy at this point. It doesn't really matter what he does or says.
Yeah, victim of his circumstances, I suppose. I want to talk about gold outflows from London recently. I want to read a quote from an article on Bullion Vault. It says data showed stockpiles in London, the precious metals central trading and storage hub, shrinking by the fastest amount on record. What do you think is driving these record-breaking outflows? What does it mean for the bigger picture of the gold market, the economy? Lynette.
Well, I think that this is such an interesting occurrence in a day that, frankly, I have been personally waiting for, because there is clearly someone in the US or multiple someones that are taking delivery. In the US, these are all derivative products, or most of them, the ETFs, the over the counter, et cetera. That means that they can create as much gold that does not nor ever will exist as they want to, and that is now coming into question. And the other part of that, because bullion banks are borrowing gold from the Bank of England's holdings of other central banks' gold. So I'm wondering, is there going to be a rash of repatriation that we saw a few years ago? Is that going to escalate? And if indeed that does, because that's what I expect to see at some point in here in the reasonably near future, well, they've already delivered out all that central bank gold, and there is a finite amount of gold. How are they going to deliver that back? I mean, we might recall that when Germany asked for their gold back, it took something like 6 months to get it, but I bet you it takes longer this time. And I think the day of reckoning between the physical markets and the intangible markets, if it's not here right now, we're not far from it. This is definitely the beginning of that, and I'm happy to see it.
And Rafi, your thoughts on these record-breaking outflows of gold from London?
Are they actually from London? I mean, that's what people are saying. That's what it seems to be. That's what the headlines are saying. And I see another headline today that the South Korean mint has stopped taking orders because they're out of supplies.
Yeah.
If we look back at 2020, during the very wise and humble lockdowns that saved everybody's life, thank God. Then we saw a very similar inflow of gold from London to New York, or at least the mechanism was London. But if you look at the import statistics at that time, I think most was actually coming from Switzerland. It could have been London calling Switzerland saying, I'm calling in my claims on these, you ship it. I don't know. We don't know exactly how it works or who's shipping what to where. But we do know that in times of monetary stress, and I don't exactly understand why this happens. I try to step through the logic in my head. Why would this go? I haven't quite figured it out yet, but we know that it happens. And I'm guessing that I can colloquially say, without identifying each step in the process, that since we are in a dollar fiat standard, and we have been since 1933, that when there's stress in the main currency, which is the dollar, which is what all other currencies are based on, then you'll have like all the energy going into the core, which would be in New York, which is what's backing the dollar now, all that gold. So we're in another dollar stress period, and it looks like the dollar is stronger, but it's not. It's not really relative to other currencies. It is. But look, the basic point is we've seen this before in 2020. That was an sort of end of the world type of scenario, and really it was the end of the world as we knew it. We were in a different world since then. Now we're in a different stage of that post end of the world type of thing since the Trump election and everything that Musk has been doing, which is exciting and scary at the same time. But the point, look, the basic point is that, again, we're in a monetary stress point, and gold is centered around that monetary stress point. And we're seeing what's happening with the derivatives and with Bitcoin. It's headed down now. The Bitcoin to gold ratio is heading down at a support zone. I think 32.5 now, after reaching a high of 39. Watch what happened to the derivatives, and watch the ratios, not necessarily the gold dollar ratio, but the gold relative to all other assets.
I want to add a little something on that, because what has just recently started popping up on the radar are the discussions around not just the US dollar, but a number of currencies and the gold revaluation accounts. There's now like a few articles on there in mainstream media that are starting to talk about these gold revaluation accounts and how that could take care of the debts and the deficits and all that kind of thing. So this was at one point, and I did say this many times, people think you're crazy because, gold isn't part of the system anymore. But yes, it is. It never really went away. They just put it in hiding so that you wouldn't put value in this or in this, and goodness gracious, pull it out of the system and hold it yourself and be your own central bank. So I think that is a very significant new piece that is coming into play here.
Very interesting thoughts. Rafi, I want to touch on something you recently posted on X. You said, as the wholesale bullion market quakes, retail premiums are the calmest ever and repo rates get increasingly wobbly. All is not well in the monetary sewers. Break that down for us, and then Lynette, I'd like to get your thoughts as well.
There's a lot in that tweet. It's the problem with Twitter. It's too much to compress down into whatever, how many characters it is, 121, 144, who knows. Okay, so two things. I noticed that premiums are not going anywhere. They're pretty much stable, at least for junk silver. I look at junk silver as opposed to any other premium because it takes away other miscellaneous factors. So junk silver premiums are something around 6%, if I remember. Whatever number they're at, they haven't moved at all, which means that still junk silver prices are moving almost exactly with the spot price. And what that means that whatever is going on now, the stackers are not participating in it as a whole, or at least new people are not coming into the market, and that makes sense. If people's stock portfolios or Bitcoin portfolios or other derivative portfolios are doing okay and they're not panicking. So we wouldn't expect that to happen. Whereas in 2020, when similar things were happening with the gold flows, we were seeing premiums go crazy, right? Because people really were panicking. They didn't know if the world was going to end. So how this has to do with what this has to do with the monetary sewers. I was talking about the repo rate. The repo rate is another word that I'm using for the SOFR rate, the secure overnight financing rate. Secured overnight financing means a bank needs overnight financing, a certain amount of cash to close the night, and they use treasury collateral to secure that cash. So that rate is supposed to be very, very, very stable because that's the base interest rate of all other interest rates on the planet. So if it moves 1 basis point, it's a huge deal for every other interest rate. Now that's starting to get wobbly a few basis points a day. It changes like 3, 4, 5, sometimes 10 basis points a day, which sounds like nothing, but for the base interest rate of all other interest rates, it's a humongous deal. And exactly why that's happening, I can't tell you the exact mechanics of it because this is like the biggest monetary sewer in the world, but I can track the flows and I can tell you what the volumes are. And if it's wobbly, it means that the amount of cash there is getting a little bit scarce and it's going to hit some kind of break or wall or tsunami, whatever analogy you want to use. And once that happens, they're going to have to print trillions more. And it's right ahead of us. It's straight ahead.
Lynette, your thoughts?
I'm sorry. Go ahead, Jesse. Well, and I was going to say, it is really interesting to watch people participate or not participate. At Zang Enterprises, we are experiencing people that are coming in and protecting themselves with gold. And to your point, though, with the spreads not growing wider, I think it's about keeping people calmer because typically when prices are running, and I agree with you too, Rafi, that the spot price, the only reason why I pay attention to that is because that's what people pay attention to. But this is really just a trading market, and that's the opportunity, right? To get in before those spreads get really great because they're going to continue to try and, I don't know, maybe control the price, that the visible price that we see on gold and silver, even with the run that we've seen. And that is mostly in gold and secondarily in silver, because silver hasn't even concluded its cup yet. But I think it's really interesting that, we are seeing more of an influx of new buyers in, and we do a sound money foundational strategy, and everybody needs to have that because it's all the uncertainty that is in the markets. And also, Rafi, you brought up the liquidity that's drying up in the repo markets, which is the key market, to your point, that underlines all of the global debt and all of the global markets. And we've actually been watching a lack of liquidity in the treasury markets, the foundational markets, since 2015. And that's just getting worse and worse and worse. And that's also takes us back to the difference between the digital gold market and silver market and the physical gold and silver market. These two are colliding. I don't think they want anybody to really realize how much they are colliding. And it's really about perception management, that if they can manage how you perceive things, then they can manage how you move forward.
Yeah, that's an interesting point.
Liquidity issue getting much, much worse.
Can I ask you a question, Lynette?
Pardon me?
I want to ask you a question. You said that orders are going up. More people are entering the market. Are you seeing any delay times in deliveries, or is it hard for you to get any product and anything clogging up, or is everything flowing as normal?
To my knowledge, everything is flowing as normal right now.
Okay.
So it's in those larger markets where they're taking delivery that we're seeing that. It's that smart money, right? But that will trickle down sooner than later.
I want to talk a little bit about kind of the narrative versus the reality, because Lynette, you said that people's perception, if you can control that, that controls how they move forward. Right now in the US, there is this perception around Trump that he's going to take hold, make America great again, all of these sorts of slogans. The Doge committee is coming in. You've got Elon Musk standing beside Trump with his son with him for some reason, talking about, cleaning up the balance sheet, getting everything back in order, fighting corruption, wasteful government spending. And there seems to be this idea, because Trump is moving at this breakneck pace, where he's throwing out all these different ideas. We're going to take over Greenland, the Panama Canal. We're going to take over Canada, tariff this, tariff that. We're doing all of these things. And so I think there's amongst Trump's support base, which is extraordinarily large, there's this perception that everything's going to be great again. And, for that reason, perhaps more people will pile into the stock market, pushing an already overvalued small handful of tech stocks even higher. I wonder what your thoughts are there, how much this perception of Trump being a massive positive force could override the reality of the rotten system, the monetary sewer, as you're talking about, Rafi, underneath. And Rafi, I'll start with you on this one.
So the question is, how long can perception drive everything forward, drive the bubble even higher? I don't think it can that long. Perception can direct flows of liquidity that exists into higher and higher levels into the pyramid. That can happen, but it can't print money. It can't do that. So when we hit the wall, we're going to hit the wall. And I've made this point on a few of my videos recently, that I'm all for the spending cuts. If you're going to ask me, do I trust Trump? Do I trust Musk? No, I don't. But I'm looking at their moves, and I enjoy the fact that he's shutting down programs that mutilate child's genitals. That's a good thing. I mean, I can't really object to that. And a lot of other things that he's doing are good, and some of the things that he's doing are bad. But it's not. The overall, the spending cuts that he is engaging in, you can see mechanically how they're going to speed up the process of the final, monetary panic, because spending cuts keep money in the Treasury's account at the Fed. It's called the TGA, or the Treasury General Account at the Fed. They have a certain amount of money there. The less they spend, the less money goes back into the banking system. The money that's in their account is not part of the banking system, so it can't be pyramided on top of. The more money they keep there, the less money the banking system has to pyramid, and therefore the closer we're going to get to that final clog. So spending cuts are great. I'm all for them, but they're going to speed up the process of the final panic. So perception can't stop that. We could have one final spike as whatever liquidity is left, a big whale or five or six whales go, oh, Trump is great. He's going to fix everything and America's going to be great again. It's not. We're already, it's already over. But what he can do is pack the bags and then let the collapse happen and then unpack the bags when the smoke clears, hopefully. But no, it's not. Nothing Trump does is going to stop the end game. Nothing.
Well, I agree with that 100%. One person didn't get us into this, and one person isn't going to get us out, but that person may indeed speed up the day of reckoning. And also the other thing that I'd like to point out between President Trump's and Elon Musk's move, a confused mind says no, and a confused mind just says, I can't deal with this. And I think that's a lot of what we're watching. And there was a lot of hopium. My friend, the Tiger Stacker, gave me this bag of hopium. I love it. But there was a lot of hopium in there. I think there still is, but I don't think it's as high as it once was. Hence, we aren't really seeing new highs on the stock market. And with with those few tech names, some of them, yes. I mean, Meta, 16, 17 days in a row of new highs. But that is all about positioning into being right around the president. If he's the center of the wheel, right, then whoever is positioned closest to him is going to benefit from this. I'm going to be honest with you in that I'm not really comfortable in watching how blatant, not like this wasn't happening forever. That revolving door between Wall Street and Washington has been happening forever. There's just, I could say this about President Trump. He doesn't hide. I mean, you don't know everything that he's thinking or planning or all of that, but he doesn't hide a lot of things that have been hidden, right? The corporations take over. I mean, you could have a seat at the table for $1 million. That's not really that much money. I mean, if you don't have it, it seems like a lot, but in reality, $1 million to have a seat at the table with a president is not really that much money.
Interesting thoughts. I want to touch on another piece of news coming out that you covered, Lynette, regarding the Federal Reserve pulling out of a major consortium of banks focused on green finance. Explain why this is important.
Well, we were on this track because of what they classified as global warming, although not everybody agrees with that. And so there were all sorts of methods that they were positioning for additional tax revenues. That's what I saw, the tax revenues going into the coffers. So that's all being undone now. And it was first the Fed, then the FDIC, and then just yesterday or the day before, the Office of the Comptroller of the Currency. All of them have been pulling out of greening the financial system, as well as the DEI, the dismantling of diversity. So, I mean, I kind of agree with some things. I definitely disagree with that. I love diversity. I think you have a much richer fabric when you've got a lot of different people bringing in their perceptions and their perspective on things. So at Zang Enterprises, we're very diversified, and I really like that, and we're going to keep doing that. But yeah, it's this dismantling of programs that are on a global basis, and that also has to do with our allies, because I don't know that we're treating our allies a whole lot differently than we're treating our supposed enemies. Do you know what I'm saying? So it kind of positions like what the U.S. did to kick Russia out of the financial system. And then what did they do? They went and created and are continuing to create an alternative system. And my concern with pulling out of these global enterprises, not that that shouldn't happen. I'm not saying that. I'm just seeing the way we are treating our friends sort of on an equal level to we're treating our foes. Do our friends become our foes? Is that what's going to quicken the loss of the US dollar as the world reserve currency to do that final death knell? And is that really what's happening?
Yeah, interesting thoughts because to see him threaten tariffs against Canada, one of the largest trading partners that provides an incredible amount of energy, especially to the US, but all sorts of natural resources, was extremely bizarre to see over supposed fentanyl inflows. I mean, I think that's kind of being contested. I spoke to David Rosenberg, and he was saying the numbers are just so small, the actual amount of fentanyl that went through the Canadian border into the US. Rafi, I wonder if you have any thoughts on anything Lynette was talking about.
On the Fed pulling out of the green initiative. I mean, I take a more basic view of all this stuff. Why should the Fed be involved in any initiative at all? I mean, if you have an inflationary bank, a bank that has the right to dilute your currency and divert purchasing power into anything that it feels that it wants to, why should they be involved in anything? If people want to fund green initiatives, let them fund green initiatives with their own money. If they want to fund anything else, let them fund that. The Federal Reserve should not be involved in any initiative. The most that they should do is what they were designed to do in 1913, which is, I think, support the commercial bill market. But it's so beyond that now. It's a joke. Like, you just got to get rid of it and let people support the initiatives they want to support, and let these central banks die. But that's going to happen anyway. And I guess that's what I have to say about that.
Well, speaking of letting central banks die, Ron Paul has been calling to end the Fed for a very long time now. Seemingly one of the few voices of reason in the US government when it comes to monetary policy and economics. There's now talk that he could potentially head an audit of the Federal Reserve, Musk tweeting about it. Yes, Lynette.
Well, that was, I wasn't raising my hand. I was crossing my fingers.
Yes. Well, why don't we start with you? What are your thoughts? Do you think this could actually be a possibility? And what do you think could be uncovered in such an audit? And what could the aftermath be? Could he really end the Fed?
Wow, that would be a great day, because the Federal Reserve, if we are on a sound money platform that is convertible, right? There's been this whole thing about backing and pegging. But I would love to see Ron Paul audit the Fed. I would love to see the Fed go away. In fact, I would love to see a lot of politicians go away, because we have this technology called blockchain, and the citizens could actually vote. Why do we need somebody out there that isn't really representing us, right? Anyway, so that, God, a world without the Fed. And without global central banks. I mean, how amazing would that be? Because it's all about, what are they really about? They're about controlling the rate and speed of the wealth transfer, that inflation. That's their primary job. And so I'm all for it. I'm all for it. I don't think we really need the Federal Reserve if we have a sound money platform and we can vote our minds. Not just the Fed, but a lot of the politicians. Bye-bye.
Yes, completely agree with you there. Smaller government, always better. I don't think central banks are required at all. Rafi, what are your thoughts on Ron Paul potentially auditing the Fed?
If you had if you'd asked me that last week, 2 weeks ago, I would have thought, it was a joke. But I guess it's possible now. I mean, if anything, if you could call the era we live in anything, it's the era of possibility. Who knows what the hell is going to happen? I'm in. This is a joke I've been telling my friends lately. Not to get into politics, but just to get you in the mind of like how crazy everything is. Like, I've been in Israel since 2007. We've been through 3 Gaza wars. And imagine, I tell my friends, like, imagine you were back in like 2014, like 2 Gaza wars ago, And somebody asks you, well, how's this going to end? And then some drunk guy comes up and says, you know what, I think Donald Trump's going to be elected president. He's going to kick them all out. He's going to build hotels there. And then, yeah, well, now I guess it's possible. I mean, I wasn't thinking that it could be, but what the hell? Um, so, is Ron Paul going to audit the Fed? If it, I mean, maybe God's keeping him alive and lucid. You know, they were saying Biden sharp as attack, but Ron Paul actually is as sharp as attack. He's as sharp today as he was at any time in his life. Um, and yeah, I would love to see it, but we should not imagine that it's going to be rainbows and unicorns and everything's going to be fine once he audits it and the Federal Reserve goes away. The consequence of the Federal Reserve going away is that all of its liabilities become worthless, and its biggest liability is the U.S. dollar itself. That means everyone who owns U.S. dollars, which are the technical term is Federal Reserve notes, those all become worthless. Everyone who relies on them goes down, becomes bankrupt. All the wealth transfers to the stackers, whoever they are, and then we go into an endgame scenario, and it's going to be very scary, and there's going to be a lot of people who die, and we can't deny that. But yeah, afterwards it would be great. And what's he going to find? I don't know. I think the Fed has been donating to starving African children a lot, and so they're going to be in trouble. And what else am I going to say? I don't know.
Well, not only is Ron Paul sharp as attack for his age, I had the pleasure of interviewing him a couple months ago. He is an extremely comes across so genuine and humble off camera as well as on. So I really hope he does head up that audit and we at least get some accountability for the people. This has been a fantastic conversation. Thank you both so much for coming on the show. Lynette, tell us about Zang Enterprises, what it is you do there and where people can find it.
Well, Zang Enterprises, you can find us all over the place at our website, which is LynetteZang.com, on YouTube and Twitter at the Lynette Zang, and on Instagram and Facebook at Lynette Zang. And what we really like to do is be of service. And so we do focus on helping people build a sound money portfolio and becoming their own central banks through actually holding their own physical gold and silver that's based upon historic norms as well as putting your goals first. What a concept. But we also really focus on, because you do need more than gold and silver to deal with what we're going through. So we're not quite there yet, but if anybody has any questions about food security and food, water security, barterability, wealth preservation, community, and shelter, then we're here for that as well. So yeah, working on building a global community that supports the sound money movement locally so that you can create security and all of those immediate needs that must be met. Look at eggs at $12 a dozen these days. And also a global community by having people just convert a little bit of their wealth into gold and silver so that we have a table at the seat when we're determining the new financial system that's coming in.
Excellent. I'll put links to all of that in the description below. Rafi, tell us about the Endgame Investor.
Yeah, well, it's a Substack, Endgame Investor. It's Substack, and I'm doing it's an Austrian school approach to the end game. I narrate from what I think is a front row seat, tracking the plumbing, tracking the bowels of the financial system, also founding ideas or concretizing, basing ideas on logic, so that once you understand the inescapable logic that gold and silver are money, then you no longer have any doubt, and you can withstand any market changes and any market volatility on the way. Because like if I were to try to convince you that 2 + 2 isn't 4, you would just laugh at me. So once you understand that gold is money, just as 2 + 2 is 4, there's nothing that can really phase you. And once you have that mentality, then you're ready for the end game. It's just a question of tactics. So I try to instill those ideas that give people the logical backing to be able to handle this mentally and conceptually.
Great. There'll be a link below to the Endgame Investor as well. Thank you both once again for coming on the show and sharing your knowledge with the audience.
Thank you for having us.
Thanks, Jesse.